I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone riding, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market chopped its way lower through most of last week until Thursday, which was one of the wildest days of the year. Investors were treated early in the week to a barrage of news out of the UK as chaos brought rounds of increases to their QE in attempts to stabilize the market. Actually, they're easing and tightening at the same time, which is a pretty bizarre situation. They said it was temporary, and then things seemed to change. The Bank of England acted, to put pressure on the Prime Minister Truss and her finance minister to reverse that mini budget plan that they had. And what they said was that the banks and pensions, well, you've got 3 days until Friday to balance your positions, and then we're taking that very invasive, as I want to put it, incentives to stabilize the market out, and then they would be on their own. So they need to be balanced. And that really was saying to the Prime Minister, we're not going to support your program, so you better do something to change. It seems like she listened to that. On Thursday pre-market, the CPI came out, and it was hotter than estimates, with the core jumping 6.4% for the year. That's year over year, and that's a 40-year high. When investors got a look at that, they absolutely panicked because, of course, they were looking for the Fed to have an opportunity or a reason to pause. The market was up strongly early on, like 50-something points pre-market in the S&P 500. And then when that news came out, in minutes, it fell 141 points to minus 84 points on the S&Ps. It was amazing. I mean, I don't think I've seen the prices in the E-minis move down that quickly throughout the year when you're trading intraday. Bond market, well, of course, it moved down sharply at the same time. Then shorts started to cover, and the market started to ease its way back. And rumors were in the market that Prime Minister Truss out of the UK would roll back that mini budget. And the S&Ps, as they were down 84, rallied for the next few hours to 110 on the upside. That was a 194-point swing in a few hours. Just absolutely huge, massive volatility that day. And everybody was always focused on the dollar. And that's going on right now, as just about every tick in the dollar is met with an inverse tick in the index futures. So if you're a short-term trader, you should be looking at that. Friday, it was confirmed that Prime Minister Truss would roll back those tax cuts, at least temporarily for a while. She fired her finance minister and put somebody else on, and that meant that they had to come up with a whole new plan. She said this plan was too much, too fast for the market, so she had a reason to pull back on that. And the pound, which initially had some strength, moved sharply to the downside again, as investors have no idea how all of this will sort out. So then the dollar jumped again after it had a huge reversal on Thursday, and we think that dollar is peaking right now. But when a dollar does jump, as it is here on Friday, investors hate that because it just means that there is more chaos, more flight to safety, less ability or reason to take risk in the market. And it means that the higher dollar puts pressure on earnings for the international stocks. So there's a huge focus right now on the dollar, and that sent the market to the downside again. The nice gains that the bond market had early in the day, they turned negative also and are now trading on their lows for this whole period. The S&P 500 early in the day had an over 40-point gain, and that reversed now to about a 56% loss at 56 point loss at the lowest levels. It's tried stabilizing a few times, and every time the dollar has a couple of downticks, some bids come in the futures for the indexes, but the market is not really able to get any traction today to move to the upside. So we have this huge volatility going on in all markets, and right now, as I speak, with the market down about 55 points, it's still like 100 points above its low from yesterday. So it's a long way from that bottom, and we've got some things to say about that bottom. The stock market, well, that upside reversal, in our opinion, was significant, and it does align with our timing, which calls for an intermediate bottom in the stock market right around this period. Our actual timing was from the late September to early October period. And the outside day, like we saw on Thursday, where the market opens sharply lower and finishes sharply higher, and then engulfs the previous day, well, that is significant. And take a look at the chart from Thursday, and you will see that. And while we believe that this bear market has a long time to go, now it looks like the timing is right for a good rebound, even today as we look at the market moving down very sharply. As we say and have said all along, the waves of background news are just very significant. And that's going to keep big volatility in this market. And that means that when you get the big upside moves, like we saw on Thursday, there's going to be some backtracking. But we think that for now, and it's a very high odds based on our work, temporarily that low is in. And the market probably will just be swinging in a range, in our opinion, and that range may be pretty wide. And I'll show you that later in the show as I look at the S&P 500. For the week, it's very difficult to keep up with this because the market is moving very quickly. The indexes are actually mixed. The Nasdaq is down modest amount. The S&P 500 is slightly down. Those are not very big moves to the downside, even though the volatility has been big. And the Russell actually has a tiny little gain right now. So the smaller cap stocks, which got very beat up, and did turn into what was a little bit stronger than the other indexes, remains a little bit stronger than the other indexes. Bond market 30s, they're down 1.5 points for the week, and the 10-year yields moving up over 4%, right now just a little bit over 4%, making a high of 4.08%. Gold market down about $45 on that very strong dollar. Silver down $1.80, so that's a big downside reversal in there. But we do believe that the dollar is peaking, and that will bring bids into these metals markets. And we would be surprised if that didn't start even in the next week. The dollar for the week up about 0.4%. It feels like a lot more than that based on the strength that we have seen in the dollar, and it is becoming more volatile also. And as I said, I do think the dollar is peaking right now, and we're going to see a significant pullback, and the other markets are going to like that. Oil, that's down $7 on the week. It hit our resistance area, and then per our analysis has pulled back very sharply. If you want to see all of our analysis on the futures and indexes, make sure that you become a level 2 member, and then you can see the Future Speak show. Our great analyst, Avi Ramachandran, does that on every single Wednesday, and I'm going to show you how to get level 2 for almost no money. Unbelievable. That's coming up a little bit later in the show. We've got some great stuff coming on in this show. It's all me today. The rest of the team is off this week. I'm going to bring you a piece in here where we look at, well, stock market rebound? If so, what stocks will bounce? I'm going to give you 9 stocks with favorable risk rewards for a trading bottom. That means, of course, that they could fall, but if the market falls, they could fall. But I think they fall less, and I think that the opportunities are greater in them. I'm going to show you this unbelievable deal, incredible special on level 2. It's 50% off and non-recurring for a huge amount of education and analysis that we do share with you. So that means you'll be able to get a good peek, and if you want to stay with us, that'll be up to you. And I'm going to give you my stock market analysis. I'm going to show you weekly and daily on the SPY. And I'm going to show you our chart streams with our live proprietary indicators that you could get as a level 2 member. And it's really great stuff. So you're going to see that. That's what's coming up. I want to remind you to go to our website and explore around there. Sign up for that great level 2 deal as you go to askSlim.com. On YouTube, subscribe to our channel, click the notification bell, and like this video. Give it a thumbs up. On Twitter, follow us at askSlim. And for any questions about this membership special, anything about our other memberships or huge offerings of education and analysis, write to Matt at askSlim.com and he'll be able to answer you with everything. Okay, this is a little special that I'm doing right now where what I did was I went through our focus list of stocks. These are the stocks that are the most widely traded, that have good option trading in them, and what we call as good cyclicality. That means that it's fairly readable cycles. Those are the rhythms in the market, and that helps us understand where there will be peaks and troughs and market conditions, and all of that is just so important to be approaching the market in a way that gives you favorable risk rewards. So with a market rebound due, in our opinion, even though the market is down heavily on Friday for now, that rebound is at hand, these stocks offer high odds of rebounds versus more downside, and that's a key. That while there may be a lot of stocks that rebound, of course, if the market does, these I think offer a little better risk rewards. I'm going to show you 7 of them that actually, for the longer term, are in pretty negative shape but have room to rebound and good patterns, and then 2 of them that have actually very good bullish patterns at the end that I think are high probabilities, and maybe even at this point you could say investable on one of them I especially like. So let's take a look here as we switch over to the charts on the first one of these stocks. This is Caterpillar, and I'll do a little brief tutorial on cycle analysis here for those people that are watching this for the first time. Our analysis is based on market energetics. There's a natural flow in the markets, and that, of course, is money flow. It's when money is moving into the market, or the particular symbol, it, of course, is moving up. When it's correcting or moving down, well, that's because money is moving out. And the shape of the cyclical patterns is just very important. What you have on here is the Caterpillar, which is blue, and the XLI, the industrials, which is green. So now what we're looking at in here are these cycle brackets on the bottom, and those are just a drawing tool. They give us a sense for the energies in the market. You can see when you have a cycle that resolves itself, where it moves up for most of the period, this is called the right-hand translation, and hit the target zone, and then pulls back, and it pulled back actually right to that moving average, then it's in a configuration to go to a higher high in the next rising phase. So in this case, you could see also it rallied for a long period of time and then corrected right here. When you get into these corrective periods is when you have the biggest risk of money outflows. That's when you get the biggest declines. You can see that right in here is that lined up, right in here is that lined up, and right in here. When you get into the periods after the capitulation and into the rising phases, that's essentially what you have right now where the markets then rebound and rally. And you can see that nice rebound in here as it moved up from 178 up to 237. So it's about a 50-point rally in there. And these, of course, were much longer rallies during the bull market. We also have the reversal scout in here, which is a momentum indicator. In this stock, it's very choppy and wiggly and not a huge amount of value, though it will need to turn up in here and turn positive to get the rally like you saw happen right over here. In this case, it was positive the whole way and kept you in. So what does that mean right now for Caterpillar? Well, what it says is that you're in a rising phase. These two blue bars right in here, these vertical lines, are essentially the timing range for the bottom that we were looking for. What this projects to is up to, well, we look for about a 50% retracement of this downward move, and that takes you right over here to around the $200 level. So that would be about a 20% upside, a 20-point upside move potential in here into what we're looking for is kind of the peaking time somewhere out here in the beginning of the year for the stocks and for the market, and then get another period of severe risk going out there. So I'm showing you Caterpillar as the first stock and give you that little tutorial. Now let's look at the rest of these stocks, and I'll go through them a lot faster so you can see where we are. Here is CRM, Salesforce. This is another stock that's been quite negative, but again, it is bottoming. It hit our target zone right over here and now is in this time frame for a bottom. It's trading now at 144. It's pretty likely to get up to this area of 165 to over 170, maybe 175, again, in these next coming couple of months, where we think there's going to be a rebounding period in the stock market. So that's a look at CRM. Let's take a look now at two airlines. LUV, Southwest Airlines, another stock that has been quite weak and in this downward trend. Now, what makes a downward trend? Well, it's where a cycle comes down, it fails at resistance, and then comes down again to this cycle low timing period at a lower low. Negative configuration, negative configuration. When that happens, then these resistance areas are sell zones. But in the meantime, trading now at 32.60, it could make its way up to 37 to 40 in here in this time frame. That would not be an unusual move. When you look at this low over here from around 37 to 50, that was a $13 move. In this case, we're looking for approximately a $7 to $10 move on the upside in Southwest during this period of just the next couple of months. United Airlines, of course, same group and a similar pattern, though it's actually not as steep of a decline in here. Right now trading at about 35.80, and we're looking for a potential move in here up to about $42 in that area. So that's again a stock, United Airlines, that's looking like it is bottoming right now in this time frame with the stock market, and likely to get up into the 40s from where it is right now. So that's United Airlines. Two other stocks that we're going to look at now in one group, and that's in the metals group, and that's Newmont as a gold stock and PAAS as a silver stock. Right now, the gold market, silver market weakening again because the dollar is so strong. And at the same time, we believe that all of these metals are in periods where they have bottomed or bottoming and will begin to move up. So let's take a look at Newmont right here. Look at that decline from 86 right there all the way down here below 40. So what was that, like a 45, 47% drop in that time frame? It would not be unusual to get a rally of some significance in the next rising phase. So you can see in here as this rising phase came and then it came down, and this was about a sideways cycle, as you can see in there. And then as gold started to tick up again, we had this big upside rally. But then as the bear market really hits and gold became under pressure, as everything did in this liquidation phase, it started to move down. This is the timing window right in here for the bottom. And we think the stock reasonably over the next couple of months could get up over this $50 area, maybe 51. That would be about a 25% advance during that period. People are looking at me and saying, Slim, I thought you're a bear. I mean, what are you looking at these stocks that are bullish? Well, we're looking for rebounds right now in the market that should begin and maybe take us through the beginning of next year before the really bad period sets in. So we're talking about for traders or position traders that may be looking for opportunities. Again, we're not talking a whole lot about investing in here, though I have one stock at the end that I think maybe that might be the case. Here you could say PAAS, the same type of a pattern going on in here as we're in this bottoming period. Silver really tried to bottom in here and now is pulling back with the other metals very significantly. But I think you're going to see silver $20, $21 in this next couple of months. And the silver stocks are likely to do well during that period, trading here on PAAS, Pan American Silver, at 15.30, and it has a shot to get up near that $20 area. So that's a very significant rise, and that's not unusual as you look at the last rising phase, which basically took it up over here from 21 up here to about 30. So it wouldn't be that unusual to get a 40-50% gain. Because of leverage situation, the metal stocks give you much bigger gains and losses than the metals actually do. So that's PAAS, Pan American Silver. And now we'll look at the last one in this category of kind of negative stocks that are ready for a bounce, and that is Orcl, ORCL. Again, the timing is right. This has a little shorter cycle patterns than the other stocks that I have shown you in here, and it's now trading at 64 or 45, and we're projecting it to get up near this area of around 70, maybe even to 72 in this next couple of month period in here, assuming that we are going to get into a period of stability where the market does begin to give you a rebound. And I think that's really a high probability. Now, the next two stocks are stocks that are configured positively. In other words, even though the market has gotten crushed, these stocks have not made lower lows. First one is Costco right in here. I'll just remove that. And what we have here is what we call a positively configured cycle in a right-hand translation. You actually had that right in here where it rallied through most of the time and then fell very hard, and that was a negatively configured cycle. But when this rally came and hit resistance and pulled back, well, now this declining phase is running out of time and it's getting ready to have another upside move. It's come down near the 78.6%, so the probabilities are not good that it'll get through the resistance when that happens, but still we're looking for a reasonable upside move here in Costco, and that would take you from this present level 457 probably up to over 500, maybe as high as 520 in these next number of weeks. Again, this is a positively configured cycle. It is translated on the right side, which means that the peak came on the right side of the ideal cycle. Normally when that happens and it makes a bottom, it has a very good rebound after that. So Costco is in a more bullish shape than the previous 7 that I showed. And this last one I'm going to show you is Uber, U-B-E-R. This company is actually, in my opinion, and things I've read and what analysts are saying, is that their model is really improving, and improving in a way that they have a broader product mix and likely to do much better. Now you can see it was really in a very significant downtrend in here as you had this kind of downward channel going on for a long period of time like that. I mean, it just continued to follow that pattern on the downside. You could see where these lows are lining up right over here. And then all of a sudden things changed. Now, this is what makes cycle analysis so fascinating, because in here you could see what is forming is an inverted head and shoulders. And what happens is that cycle patterns form this. In our cycle analysis workshop, which you could learn about by going to our site and clicking on that tab, and you'll see tons of information. It tells you about how these patterns are formed, and that cycle patterns, cycle energies are actually what does that. So let me just get a little closer look right in here, and what you can see is that there's a left shoulder right in here. There's a head that formed here. So this was the bottom of that cycle, and the rally in the next one, it was deficient, failed at resistance, came down, made the head right in here. Now it's coming down and running out of time on the downside, making the left shoulder. Were this to be able to get a rally as anticipated, it would then very likely break out of that neckline, and then you'd have the head and shoulders completed. Now, it would probably have to get up here above 33 to be able to do that, so it has a lot of work to do to get there. But in the meantime, these positive patterns say this stock very likely will surpass this level. The probability of surpassing this high is better than 70% when you get this positively configured cycle, as you see right in here. And if it does that, it's going to be an inverted head and shoulders. And that makes this stock actually maybe the only one of the 9, maybe Costco, but maybe this one is really the best, that in my opinion is actually investable, that for the longer term can give you some better prices as they improve the model and analysts get on board with that. So right now it's just completing this cycle, and we're going to look for a move up here from 25 potentially to that target area of about 35 right there, and that's a pretty significant move. This is the one I like the best out of all 9, but I think that what you're looking at is a overall very, very good pattern on all of these stocks that we look at that I think are quite significant as far as their risk rewards being good. In other words, probabilities of bottoming are high. The probabilities of responding to an upward move in the stock market are high. The probability of resisting the downside moves are high. That all says that these have good risk rewards. And these are 9 stocks that I think you should really pay attention to. That's my special on this for the day. All right, I'm going to give you my analysis on the stock market, but first, this deal is going to blow your mind. Don't scroll forward. You got to see this, especially if you're not an askSlim member. This is our level 2 trial. It's a special 50% discount. What's so special about this is that it's only $29.50 for a ton of stuff, and it's non-recurring. So a lot of people don't like to subscribe because they don't want to have to cancel, and they don't know if they're going to like it, and they're it's just to them it becomes a nuisance when they have to look at something and then unsubscribe and not being confident that you're really going to get unsubscribed. I get that all the time, though we're really good at that. In this case, it's non-recurring. You're going to pay me $29.50 or us, and you're going to see an unbelievable amount of stuff. You're going to get our stock index report. That's a live stream where you're going to get our intraday analysis on the S&P 500, NASDAQ, and Russell. It is outstanding. Support, resistance, acceleration zones, and our reversal scout to put you on the right side of the trade. You're going to get our stock index report. This is a daily snapshot on the indexes. It is super comprehensive. It has all our charts in there, and you're going to love that. You're going to also see our chart streams, which is, again, live charts. You don't need a special platform, and you're going to see our multiple time frame analysis with our proprietary studies on there. And I'm going to show you that in just a few minutes when I do my analysis on the stock market. You'll get our weekly ETF review, our Slimulator momentum tracker with our built-in algorithms for position traders and investors, 1,000+ stocks in there. Future Speak show, Harvey does an amazing job at 24 different futures and indexes, looking at weekly and daily charts. So he's going to go through almost 50 charts in about an hour and do teaching the whole time. You're going to get our whole library, over 600 videos, of which most of them, the first 5 years or so, I created 10 different categories, and so much education in there, and you'll learn so much from all of our analysts. Now, we have 4 analysts on our team, and they are phenomenal. And you'll get our new trader workbench for all kinds of planning support and access to our Discord channel where our analysts are in there helping people all of the time. There is too much for me to show you right now. I'd have to be an hour or so going through stuff or more. So I want you to go to askSlim.com. Go to the top of that page and click the Learn More button. And it's all there. It's going to tell you everything and give you all kinds of pictures on it. You'll be able to sign up right there for $29.50 non-recurring. Just $29.50, and you're going to have 1 month of all of this fantastic stuff, and then you're done. Or you could subscribe with other specials we have for you for any of our different membership levels. You can write to Matt at askSlim.com for more information on that. This is the stock market. We're going to look at the SPY, and we're going to look at daily and weekly analysis. Plus, we'll look at the chart streams, and you will then get an idea of what our live broadcasts are like with all of our analysis in there. So I think you're going to find it very, very interesting. And if you're going to, a reminder that if you subscribe to level 2, you're also going to get our daily snapshot, which has full analysis on the S&P 500 and NASDAQ, the NASDAQ and the Russell every single day that's sent to you. So that's all part of the level 2 special. Let's take a look now as we move over to the charts. I'm going to leave this Uber page right over here and take you to SPY. So this is SPY, and we are now in what we consider to be the window, and maybe a week outside of that window, where a bottoming is likely to come. If you are new to our analysis, then what we have here is cycle analysis. On the bottom are drawing tools, which are the cycle of brackets. On the top is how the cycles actually resolve themselves. And in this case, where you see the yellow ovals, that is where the biggest downside risk is, where you see these downside, what we call nesting, as cycles that come down. Then we have this much bigger cycle in there that's a 36-week cycle that nests way out here with these other cycles. And this is where we consider the real risk to be here in the stock market for another very significant move to the downside. But in the meantime, we've been looking for, of course, the market to fall all year long, except we thought that the fourth quarter would bring a time frame where there would be a opportunity for a market rebound. Now, if you didn't see the previous segment that I did, I show 9 stocks that I think will be participants with good risk rewards in a rebound. Also, what's going on right now is that you see this hammer here for the week where the market had a big rebound. This was on Thursday, and I'm going to show you the daily chart also. That's all in this time frame where we think the market will be bottoming. Now, you could see in here the reversal scout, and in a moment I'm going to show you our other momentum indicators. It's moving down very sharply, and this has work to do to make a bottom in here. Now, once the bottom is established, and that bottom is really not going to get established until the dollar finds a peak, and we think the dollar is getting ready to peak or peaking right now, so that's going to give you an opportunity for a rally. What are we looking for now? Well, we're looking for the market to stabilize and then begin to be able to get some upside. As just investors got sold out in here, and some big shorts in a lot of categories begin to cover, and they start to talk about the market, the economy slowing down, and inflation, which is still very strong, the comparison numbers starting to get a lot better. All of those things are likely to give the market a reason to try to rebound, and we think that this is the time frame it can rebound. So the bigger cycle that you see in here, we think that'll move up to sometime in January. Here's the minor cycle right in here, and our upside projection right over here, this is around 380. So that would be approximately 200 points in the S&P 500, something like that. That's not very much based on this market. This is kind of the middle range on those minor resistance, about 393. And to me, that's a lot more likely that we'll see that. And we'll see that in just the next number of weeks. Now, if we come and take out this low under this 3,500 level, it's going to change these upside projections. It'll mean the bottom didn't come yet, though I think that that's a low probability. I think it's more probable that the market is going to be able to hold up in here, and that the low will have been established. And I'll show you that on the daily chart also. So we're looking for this time frame in here for a rebound, and just looking out in this 3-month plus time frame, when this minor cycle right out of here peaks, which, sometime in December, early in the year in January, you then get into these much, much more negative periods right in there, and a fairly good potential that it moves down, well into the under that 350 area, maybe 320 or lower than that. But right now, we don't want to focus too much on that negative period. We want to really look at this period right in here where we're likely to get a rally. The intermediate resistance there is at 405, and the 38% is at 392. That 392 area really looks like it's going to be a magnet to us in here over these next couple of months. 405 would be under a very, very good performance, but it could happen. And again, we say that to you now when the market is extremely weak and just now giving a little bit of a sign of bottoming. Let's switch over to the daily chart in here, and this is incredibly interesting in here. What we have here is we've done a little revision in case our members are looking at this and saying it looks a little different to them. While I was working on how that timing is working on the intermediate chart, Matt sent me over his look at the daily chart, the shorter term, looking very carefully at a 27-day harmonic. So there are shorter 8-9-day harmonics in there, and that's these smaller little moves that you see right in here. And there are 3 of those minor thirds right there in each of these dominant cycles, 29 and 9 and 27 days. You can learn more about cycle analysis. Go to askSlim.com and look at the workshop page, and you'll see that. Now, we're looking for a bottom, an intermediate bottom to form, and at the same time, you can see in here, we're looking for a daily or short-term bottom to form. This engulfing that you see right over there is in line perfectly with what we were looking for on the weekly chart. And normally when you get a good candlestick signal like that, and let's just take a look here at what these last signals were like, that is significant. And you can see in here that you had an island in here that made that bottom. Here you actually had an island peak that made that top. Here you had an abandoned baby that made that top, and here you have an engulfing pattern that looks like it's made that bottom. Now this was a giant, almost 200-point reversal right there in the S&P 500. This pullback in here is not that strange, and today on Friday we're getting a big move down again in the foreign currencies, British pound, lots of turmoil there. That's giving the dollar another bid on the upside, and that's why this market's getting sold. Traders are looking at the dollar every tick. Now, if you're an intraday trader or day trader, you got to be looking at the dollar. If you're not, you're really not going to understand what's going on in the market. One more thing I want to note to you in here is that this is the slim ribbon right in here, which is our momentum indicator. And you can see in here when it was positive, the market was moving up. When it turned negative right in here, the market was moving down. When the bars are red and the slim ribbon PO is red, you're in a negative condition. And each of these arrows gives you a momentum resumption condition. Here it give you an upside resumption as it was moving up. Here it's been warning of downside resumptions, and it's still red. That means that the market has a lot of work to do. And that's what you have to be really cognizant of. While we're looking for a bottom, this really looks like the bottom to us on that engulfing pattern that formed right over there. It has to prove itself out, and it has to improve these momentum conditions in order to be able to get the upside move that we are now looking for, projecting. The middle of this resistance right over here is at around 380 right there. So these resistances are 372, 380, and about 388. And we think that they're going to go there after this panic in the UK market is over with. If the banks, pension funds get their positions all evened up here on Friday, which they're really being pressed to do, and we don't see UK fall into the ocean, then the market is likely to do better actually even next week. So despite the fact that the market's pulling back sharply in here, we think that this bottom is forming here where the timing is correct on the weekly chart, and even the capitulation brought it a little bit further longer in time, which is not unusual. Here you have a situation where it looks like that bottom is beginning to form on the daily. Now, if you get below that low, which was 348.11, this will have changed. And that's a good spot right over there to tell you that you can be looking for the market to be in trouble. That's way down 348.11, which is right around here, and we'll just carry that across right there so you can see that's what it has to do is get under there to violate right now what we're looking for. Right now, we're looking at these time frames giving us an idea that it should be bottoming based on everything that we have given you for this whole year. This was the time frame we look for that, not for a bull market, for just simply a rebounding period that could last for as much as a couple of months. It could last for as little as a month. And if that's the case, we'll really see the weakness there in the market. So that's what we're looking for right now. And we're going to look for the market to solidify and then give you the first gain. There's the resistance right there at 380. Here's the resistance right there at 380 on the daily. Here it is right over here on the weekly. And that's what we're going to be looking for. Breaks the low down in that area of about 348. Then you'll know this bottom has not formed yet. So highest probability is it is forming. Now, let's take a look here at this is live right now, and this is available to level 2 members, where it looks at the multiple time frames with all of our proprietary indicators on there. What you see here is this is the weekly. We don't really show much of that other than we want you to see, because this is for shorter term traders, we want you to see that the momentum in here on the weekly is negative by the reversal scout. Here is the daily right over here, and this is what I just showed you where the bottoming comes in here. This has that cycle in there, the revised cycle showing you that, and the bottoming right here. Here is the slim ribbon PO, which shows you it's negative. This right over here is the SMI, which Matt does a lot of work with. And here on the bottom is the option bias indicator. And you can see in here that it has been warning red. It's really been negative and telling you that this market is still in negative condition. This has to begin to improve. On your 2-hour chart, which is so key, you could see it got up here into the resistance area and then began to back off. And now here it's getting to that support where we would expect between 35.86, 35.28, as Matt has labeled, that would then hold the market as it would begin to move up again. And here you can see again the slim ribbon PO, which has neutralized here on the 2-hour, which is pretty significant. And you can see on here on the bottom, the market condition indicator, which is a proprietary level 4 indicator, just as the option bias indicator is, and the slim ribbon PO, that giving you very negative readings this whole period of time, even through that rally. And that has to improve before we get into this upward look that we're getting at. Here you can see as it rallied in here, the 15-minute turn down. This is Matt's fine work on the stock on the SIR live stream. This has its own separate stream also, which you will get as a level 2 member. And now what it did was it went through the yellow areas. Those are the areas that are acceleration zones. That's likely it's going to move through it when it gets there, but now getting into the support area right now. And this is likely to hold right over here as it pulls back after consolidating that huge gain from Thursday. So this is just a ton of information with all of our proprietary indicators. And I'm telling you what this is saying is that the momentum conditions are still very negative. And you can have this, of course, by becoming a level 2 member with our special deal. that I showed earlier on in the show. I'll give you a little peek of that in a moment. That is our chart streams live stream. We actually do this for 11 different 11 different symbols, but as a level 2 member, you will get this one with the stock market. So I wanted to give you a good peek at that, and you can see that it has a lot of work to do before you really get into a period where it can get any upside traction, as this bottoming is forming right over there. That's a look at the stock market. We think it's bottoming. It's the time, place for it to do it. And now the market has to prove that that is the case. That's it for this amazing show that I just brought you. I had a lot of fun bringing you all of that great information. I hope you found it very interesting. I want you to go to our site. This is incredible. Level 2 special trial, $29.50 non-recurring. You'll get everything I just showed you, that both of those chart streams that's on there, our daily snapshot, our ETF weekly review, our Slimulator momentum tracker for position traders with our algorithms in there, Future Speak show, our whole library of 600 videos in 10 categories, and our workbench for trade planning, and access to Discord, where we do a ton of teaching in there from our whole amazing analyst team that we have here. So go to the top of the page, click on Learn More, and then if you're a first-time member, you have a great opportunity. Or if you're a free member, you can step up and become a level 2 member, non-recurring, for $29.50. All you have to do is sign that up, and then in a month, it's going to go away. And if you want to stick with us, it'll be up to you to choose what level you want to join, and we'll offer you a special even to do that. So $29.50, wow, do that right now. That's it for the show. I hope you've loved it. Make sure you go to our website and don't miss our special. We still have the last of our level 1 special has now ended, so I need to change that slide. And you can get the level 2 special. On YouTube, subscribe to our channel, click that notification bell, and like this video with a thumbs up. And watch our member videos in the playlists. On Twitter, follow us at askSlim. And go to if you have any questions, just go to your email and send a message to Matt. Tell him you want to know about memberships, anything about our huge offerings, and what some of our education and analysis means. He'll help you with that also. And I think you will be incredibly well informed. I hope you love this show. I want you to be so incredibly careful. It is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to sit